All right, traders, what's going on, guys? Here in the Top Trader office. We are assessing the New Zealand dollar and the Australian dollar because if you guys don't know, there is a massive correlation between the two. All right, so I want to do a quick deep dive on exactly what's been happening with both currencies and how the Japanese yen is doing the exact opposite of what both of those pairs are doing right now. Obviously, it has to deal with something going on with the trade war, but we've been able to capitalize on some pretty good opportunities on both of those pairs because we understand what's happening fundamentally. Okay, so let's do a quick deep dive on what's happening with the Australian dollar. I'm about to go into the charts, Australia and New Zealand dollar. If you guys are new to the channel, what's going on? What's up? Make sure you guys subscribe, and if you US session just wrapped up, and if you guys like the video for your boy, I very much appreciate it. All right, let's take a look into the charts. All right, traders, so as you guys saw in that little preview there, I put up a snippet of a Euro NZD sell side move that we were looking at that ended up working out. All right, so this is the NZD index here, but real quick, I want to show you guys that Euro NZD that we ended up putting out for our signal members or whatnot. If I go down to the 4 hour, I'll go down to the hourly, you guys will see a massive sell side explosion that we were calculating. So we were looking for a price move outside of this range. We felt like we would get a retest of this lower bound here at least, and that's exactly what we got, right? So markets ended up rolling back down and then hitting back off on the structure here, but notice what we got, man. No, markets ended up turning right back around in the structure. So again, we mentioned it was a one-to-one. It was a real quick grab and go, and we really did not want to fight this NZD weakness that we're seeing perpetuate over this market time and time again. Okay, so you guys can see here, starting off at around March 26th, we ended up getting a massive sell side candle, and subsequently since then, we've seen nothing more than these smaller rallies, really three of them. One here, two, and then three rallies, but you can't even really call them a rally. It's just some intermediate buy side pressure that's coming on the NZD, usually around major areas of structure. Okay, so you can see that happening somewhat around this area here, right? You can see once markets got to this low, you can see that there were some more buyers that came on in pretty quickly and that wanted to somehow, you know, figure out if they could get some size in on this NZD, but that came up pretty short. And then you get this last little rally, and what were we looking at, right? Where's that last structural area? Well, if you zoom out just a little bit further, there you go. All right, so you can see that markets are reacting to these previous price areas, and this is on an index, folks. This is not a currency pair, okay? And so this is why we play these indexes so importantly, because you're getting understandings of and real price structures more than you would find anywhere else. Okay, so again, indexes are so important when it comes to really cultivating a thorough methodology that allows you to truly see what's happening for that particular asset. All right, this is the NZD asset. This is an actual currency by itself. All right, it's so much more important to look at that than the pair and to see what's happening, because then you're getting wishy-washiness over what's happening with the other pairs or whatnot. And wishy-washy is a technical term. All right, so look, if we go over and we take a look real quick at the weekly, what you guys will notice here on the weekly is, again, just more sell side pressure. But what you'll also notice is we are now sitting at the low that we got to Q4 last year, and so we're not quite there yet. But who knows? If this trade war escalation keeps happening, what you guys will notice is this sell side move continuing, and there won't be any real reason to try to come around and start buying up this particular market. Now here, look, this is what I want to show you guys that's pretty interesting. If I show you the Australian dollar, notice the correlation here. Okay, we're also getting sell side. Again, this is a weekly. I'll pull on over and you guys will notice again. So we're still seeing sell side momentum around the exact same time we started to see that sell side momentum on the NZD. And so we always have to remember the New Zealand dollar and the Australian dollar, their largest trading partner is China. And if you guys were to go check out the Shanghai index, I'll put a link to the Shanghai index below. You guys will see the Shanghai index. When it sells off, you'll usually see some type of correlation between the Australian dollar and the New Zealand dollar selling off as well. Okay, and so all of these calamities that are coming about when it comes to this, this market right now that are coming from Trump and that's coming from Xi Jinping, folks, until it gets resolved, we're going to be hard pressed to want to buy these two specific currencies. And so, of course, this also leads us to a potential opportunity. If anything escalates when it comes to the trade war, Where do you think we're going to go? All right, we're going to go straight over here. So again, the more knowledge you have about this market, I cannot express this enough, you guys need to always be rationalizing intrinsic value. I will preach that until the end, okay? Intrinsic value is how you understand where markets are supposed to be priced. All right, you're not going around buying cars based off of their price, right? If I try to sell you a little Mercedes, let's say C-Class for $20,000, you're like, oh wow, that's a great deal. Or what are you probably gonna think? Wow, why is that so cheap? Let me look and figure it out. Is it the engine? Is it the transmission? Am I getting scammed? Okay, so look, the same way you would try to evaluate that particular asset, all right, is the same way you need to be evaluating these assets as well. Don't just buy things strictly off of price. It makes so much logical sense outside of Forex, but for some reason, technical junkies, or maybe even people watching this video right now, are still gonna have an argument and say, dude, it doesn't matter. Price shows it all. Price gives you an idea as to where, what are you talking about? In real life, you never say that. In no context will you ever do things strictly off of price. You wanna know what you're getting. You wanna know why it's priced at where it is. And Forex is different? It's not. Forex is an asset class. Forex is like equities. Forex is like commodities. Forex is nothing more than a marketplace of buyers and sellers. Like real estate, like an auction for painting, okay? People have an idea of where an asset should be priced, and all you're trying to do is rationalize why. That's it. Just ask the question why. All right, I'm done with with berating you guys. Now, take a look at this. Japanese yen, all right? I'm gonna go over, I'm gonna show you guys what we're looking like on the weekly on the yen as well. And what you guys will see, I don't need to buy TradingView, all right, sheesh. What do you guys see here? April 15, 2019. Let's take a look at the Australian dollar real quick. What do you guys notice? All right, April, same week of April. All right, just a little bit of a week later, but same week of April really, and we see another sell side move. So right now we're noticing an uncorrelated, all right, Japanese yen, Australian dollar, NZD. Again, folks, this is happening because of the trade war. Japanese yen, safe haven currency. Okay, I don't know if you guys know, but the Japanese yen right now has a negative interest rate. Check this out. Head over to Trading Economics. We love trading economics here at Top Traders. We don't like to use Forex Factory so much. All right, we'll use it just like as a quick grab and go in regards to seeing what's happening from a fundamental or really a forecast perspective. So here, take a look. Let's type in up here at the top. What are we going to? The Japanese yen. So what I gotta do is type in the JPY. Now I wanna show you guys over here the interest rate. Notice that right here, a -1. So what this means, folks, is that if you have a Japanese savings account right now and you put your money in that savings account, folks, you're gonna be losing money on a semi-annual basis, okay? Anytime they take out a payment or interest, however their interest is structured over there in that economy, all right, you're gonna be losing money because they wanna see more monetary velocity, okay? Monetary velocity is when there is more capital going inside of the economy, fluctuating inside of the economy. You can also call that inflation, all right? Inflation is literally there being more capital in the economy. Now that can happen two ways. That can happen because of demand push inflation, or that can happen because of cost push inflation. Cost push inflation is CPI, all right? Consumer Price Index, all right? But it's also pronounced cost push inflation. They're both the same acronym, which is kind of ironic, but they're also somewhat the same thing. Cost push inflation is when prices go up, and so when prices go up, what happens, folks? You have more money fluctuating inside of the economy, right? Well, boom, now we have higher inflation, but there's also demand push inflation where we can be printing money and just throwing it in the economy, all right? I'll show you what that looks like here as well. All right, let's type in the United States. Let's take a look real quick at demand push inflation, all right? So let's see, all we gotta do is come over here to money, the money area, and then we're gonna go to the money supply. So the supply of money in the economy, all right? If a supply of capital increases, that means there's literally more dollars in fluctuation, period, all right? So MO money is money that is fairly accessible. M1 money is money that's a little bit harder to be assessed. So that's money maybe locked inside of a 401k or something like that. MO money is like cash in bank accounts and very easily liquidated money. And M2 money is like, you know, bonds and things of that sort. That takes maybe years to mature and things of that like that, right? So let's head over to the money supply, MO money supply. So what you guys are noticing is that there is a shrinking here, all right, of the money supply. They're printing less and less cash. But let's take a look at what was happening during the recession. All right, let's max out real quick. Take a look at that. So for the past, since 1968, the money supply was fairly stagnant. We started to print a little bit of money here as well. This is where people started to say, holy cow, what's happening? This is fake. Remember, Bretton Woods was in 1971. That's when our money was pegged to gold. Once we unpegged from gold, notice that markets slowly started to trend higher. People started to put more cash into circulation. All right, that's bad because now our money is technically worthless. Folks, look at what 2008 did. 2008 put the United States in a predicament that it has never been in throughout its entire existence. Because before the 1960s, what do you got? Right? Yeah, you got the 30s, but then that's right after that, you got the 20s and then 1910 and then 1800s. You really have shit of an economy, right? I mean, we're in the technological age and we just put ourselves in a situation that no one's really been able to experience in a very long time. So as you guys can see, we're trying to now shrink the money supply by doing what Yellen set up right before she left office and Powell came in. Okay, I'm giving you guys all the knowledge. Whoever's still watching this video, comment down below if you're still watching this video. I'm gonna send you guys something because that's impressive. All right, comment down below. I'm gonna send you guys something. All right, anyway, so look, Yellen said, hey, look, I'm gonna put some cash off the balance sheet. This was them basically printing money. Yellen said, let's stop printing money. All right, and then not only let's stop printing money, she said that up here at the top. Let's go to the 10-year. She said, let's stop printing money up here. And then she said, basically, let's take this capital out of circulation. Now, she's doing that in a couple of different ways. She's letting bonds mature, all right? And so you're seeing now money roll off the balance sheet. Okay, and so now you're seeing money get out of the economy. So again, this is all relating back to the Japanese yen and me basically trying to help you guys understand Japan is trying to do this. They're still in the uptrend. They don't want to see the flat line and they definitely don't want to see the decline. They want to see more money in circulation so they can steam ahead and get their economy back in the right footing. All right, let's take a look and see what Japan is looking like real quick. You guys gotta love trading economics. All right, here, let's see. Head over to Japan, and here we are, okay? So we're moving over to Japan. Let's take a look at the money here as well. Their MO money. What are you guys noticing? All right, I'm not guessing here, folks. This is real life. Okay, there's more money coming back in this economy month after month, year after year, because they're still trying to stimulate their economy, and they've been doing it since Bretton Woods, 1971. Notice what you see, okay? So folks, there's a lot going on the back end. All of our Academy members, by the way, if you guys did not get the signal, all of our Academy members are also going to be getting hooked up to the signals as well. I forgot to mention that a little bit earlier. But folks, there's a lot happening in this global economy right now that we can take advantage of. All right, so much price momentum, so much volatility. If you guys know what's happening behind the scenes, you will be so much more adept to be able to really, truly take advantage of the massive price moves that we're seeing happening in our markets. All right, so if you guys got any questions, let us know. Schedule a call with us over here at the Academy. Just click the Academy link in the bio. We'll love to help out anyone that is truly serious about learning how to take advantage of these markets and whatnot. We will see you guys probably next week, Sunday. Might be able to push something out before this week's out, but if not, I'll see you guys on Sunday, all right? Have a good one.